Welcome to the Deep Dive, your shortcut to understanding the forces truly shaping our world. Today, we're plunging into what feels like a really pivotal moment for Bitcoin. Over the last 24 hours, the digital asset landscape has seen some, well, pretty extraordinary developments, and we're here to distill it all for you.
Yeah, cut through the noise.
Exactly. Our mission: clarity on Bitcoin's trajectory, whether you're an investor, an enthusiast, or, simply curious about where all this is heading.
That's right. And it's important to remember this space isn't static. It's a constant interplay of major economic shifts,
Yeah.
evolving regulations, exciting tech advancements,
Right.
and this growing wave of institutional adoption. Our goal here is to synthesize all that complexity into a clear, actionable perspective, show you the bigger picture.
And we promise you'll walk away not just informed, but hopefully with some surprising insights, maybe a few aha moments and practical understanding, all without, overwhelming you.
Let's get into it.
Okay, so what's really happening out there? Let's unpack this. Let's kick things off with Bitcoin's current pulse, its market standing, and network health. You might hear whispers about other assets, but Bitcoin's role. It's still foundational.
Absolutely undisputed.
It recently hit its highest daily close ever, an astounding $120,107. And it still commands, about 59.2% of the entire crypto market?
Still the king. Yeah.
Now, zoom out a bit further. The global crypto market cap recently touched a new record high, over $4.061 trillion. It's hovering around $4.03 trillion now.
Incredible numbers.
Think about that. That's an 84.49% increase year over year.
Right.
When you see this kind of sustained growth in the high trading volumes, what does that tell you?
Well, it signals robust demand, definitely, and deeply rooted investor conviction. It seems like it's far beyond just fleeting speculation at this point.
Right, so it's not just hype.
What's truly fascinating here, though, is looking beneath that price action. The underlying health of the Bitcoin network itself is incredibly robust.
Oh, so what are we seeing?
We're seeing consistent numbers for confirmed transactions, typically, somewhere between 386,000, almost 450,000 per day. Stable.
Okay.
The average block size, that's how much data fits in each block, that's holding steady too. And the mempool size, think of it like the transaction waiting room, it's quite manageable.
And need your backlogs.
Exactly. And crucially, the hash rate, the sheer computing power securing the network, is consistently strong, often between, say, 949 and 1,060 exahashes per second. It's massive.
Wow. Put that in perspective for us.
Imagine a digital fortress. A strong, consistently high hash rate means that fortress is incredibly difficult, almost impossible to breach.
Okay, got it.
So these stable, high metrics provide immense confidence in Bitcoin's security, its ongoing utility. It shows it's a functioning, active network, not just, a ticker symbol. It's building a solid foundation.
So the network itself is sound. But how does the market feel about all this? Crypto quant analysts, they paint a bit more of a nuanced picture, right? It's good to look at different angles. Borisfest, for instance, observed that while Bitcoin did retest its all-time highs, the total market volume didn't see that huge surge we've seen in past rallies. He sort of raised a question like, maybe the breadth of participation wasn't quite as wide this time. What's your take on that, considering the other data points?
Yeah, that's a fair observation, and it really highlights why looking at multiple indicators is so critical. You can't just take one piece.
Right.
Because when we look at, say, Avocado On-Chain's analysis of binary coin days destroyed, or CDD.
Okay, what's that telling us?
Well, CDD tracks when older, long-held Bitcoin suddenly moves, and that indicator recently turned lower after just a brief rise. This supports what we might call a stair-step rally.
Stair-step, meaning?
Meaning the market advances more gradually, maybe less dramatic surges, more consolidation. But what's critical here is that selling from long-term holders, it remains significantly subdued.
Ah, okay.
These are the folks who've held Bitcoin through thick and thin, multiple cycles. Their continued holding signals incredibly high conviction. They're not rushing for the exits.
They believe in the long-term story.
Precisely. And Darkfoss insights really hammer this home. Their apparent demand metric. It shows over 160,000 BTC accumulated just in the past 30 days.
That's a huge amount being bought up.
It is. And even more telling, these accumulator wallets addresses that mostly just buy and rarely sell, they added around 50,000 BTC in the last month alone.
Wow.
But here's, I think, the really profound bit. The supply of Bitcoin on over-the-counter or OTC desks has plummeted.
These are the desks for big players, right? Institutions.
Exactly. Where large institutions, wealthy individuals make massive, often private purchases, That supply has crashed from 550,000 BTC back in September 2021 to just 145,000 BTC today.
That's a massive drop. What is that scarcity signal?
It strongly suggests that significant institutional players, and the whales, are not just testing the waters anymore. They're systematically absorbing supply, often quietly, because they deeply believe in Bitcoin's long-term value.
So it's not just retail driving this.
Not at all. This is a profound structural shift in demand. Serious long-term money is moving in.
So when you put all that together, the solid network health, the conviction from long-term holders, and this institutional accumulation, what it implies for you listening, is a really robust foundation for Bitcoin.
Mm-hmm.
This isn't looking like just an unsustainable speculative bubble ready to pop.
It doesn't feel like it, no.
Instead, it suggests a more sustainable growth path built on solid fundamentals and, like you said, deep conviction from serious players. It feels like it's maturing.
It really does.
Okay, now let's shift gears a bit. Let's talk about those powerful forces reshaping Bitcoin's future. The tectonic shifts happening in the regulatory and institutional worlds. Here's where it gets really interesting.
Agreed. This is where the potential for massive capital flows comes in.
Right. So what's happening on that front?
Well, we saw SEC Commissioner Hester Pierce. She's often called Crypto Mom.
Right. Known for being more open to crypto.
Exactly. She made some significant comments just on August 12th. She spoke about tokenization and, importantly, about including digital assets in 401k retirement plans.
Okay, that's potentially huge for mainstream adoption.
It is. Her emphasis was on letting market forces decide which forms of tokenization succeed. But what's really noteworthy is she acknowledged President Trump's executive order, which actively helps pave the way for digital assets in 401k.
So a nod from within the SEC to that policy.
Yeah, and it's more than just a comment. It signals a positive kind of pragmatic stance from within a key regulatory body. Compare that to the SEC's past regulation by enforcement.
Which caused a lot of uncertainty.
Exactly. This suggests a more accommodating, maybe forward-thinking view is gaining traction. That could really open the doors for broad retirement fund access down the line.
And it's not just talk, is it? We're seeing actual companies, publicly traded ones, putting Bitcoin onto their balance sheets.
Accelerating trend, absolutely. And these aren't small bets. We're talking major strategic moves.
Like who?
Well, Japan's MetaPlanet just added another 518 BTC. Their total is now over 18,000 BTC.
18,000, wow.
Yeah. And in the UK, the Smarter Web company picked up 295 BTC for about $35 million. They now hold nearly 2,400 BTC, worth close to $285 million.
Okay.
And then there's MicroStrategy, the trailblazer, still going, just bought another 155 BTC. They're getting close to holding 3% of all Bitcoin in existence.
3% of the total supply on one company's balance sheet. That's incredible. These aren't just investments, they're treasury strategies, right?
That's the key point. The significance here cannot be overstated. These firms are making Bitcoin a core treasury asset. They see it as a strategic alternative to holding cash or, other volatile assets.
So what does that do to the market?
It means they're effectively taking Bitcoin off the liquid market supply and locking it up for the long term. This creates a non-speculative demand floor.
A baseline of demand that isn't just traders.
Exactly. That's crucial for long-term price stability and sustainable growth. It signals this fundamental shift, legitimizing Bitcoin as a corporate balance sheet asset globally. It's a huge vote of confidence.
And it seems like it's spreading beyond just tech or finance companies, too.
Definitely. Marta Technologies, a Turkish mobility app, just announced plans to put a significant chunk, 20% of its cash reserves, into Bitcoin.
A mobility app in Turkey. That really shows diversification, doesn't it? Across industries, across geographies.
It does. It's moving beyond the usual suspects into, everyday business models.
And this corporate interest seems amplified by what the big banks are doing.
Hugely amplified. We're seeing more than half of the top 25 U.S. banks now actively evaluating or actually deploying crypto products, mostly custody and trading services for now.
Give us some examples. Who's doing what?
Okay, get this. Morgan Stanley, preparing its 15,000 brokers to recommend spot Bitcoin ETFs to clients.
15,000 brokers. That's massive potential inflow.
Huge. Charles Schwab, planning direct Bitcoin and Ethereum trading on its platform, PNC, partnered with Coinbase so their wealth management clients can trade crypto directly.
Making it easier for their existing clients.
Streamlining access, yeah. State Street, a massive institutional custodian. They're looking at stablecoins, tokenized deposits. BNY Mellon, another giant, is custodian for Ripple's new stablecoin.
Okay.
And even JP Morgan, who used to be quite skeptical, right? They've launched multiple crypto initiatives this year, including a tokenized deposit pilot.
So the big traditional players are building the infrastructure.
That's the massive implication here. They are actively constructing the fundamental plumbing, the rails, if you will.
Right.
This is how vast amounts of traditional institutional capital can actually flow into crypto. It dramatically lowers the barriers, compliance, security, access for the big players.
So it makes it easy for huge pools of capital to enter the market.
Exactly.
Yeah.
It's channeling potentially enormous amounts of capital directly into Bitcoin and the broader digital asset market. It's not just a game changer. It feels like laying the groundwork for mainstream institutional finance to fully embrace this. Could redefine global finance.
Okay, let's pivot now. Let's talk about innovation within the ecosystem itself and some of the market dynamics playing out. We saw the launch of the first RGB bridge on August 12th. What's RGB and why does this bridge matter?
Right, so RGB is a protocol. Think of it as a way to add richer, more complex features like smart contracts and tokens directly onto Bitcoin's secure base layer, but using things like the Lightning Network for efficiency.
Okay, so bringing more functionality to Bitcoin itself.
Essentially, yes. This first RGB bridge specifically lets you move USDT stablecoins from Ethereum over to Bitcoin's Lightning Network.
Why is that significant?
Think about it. Highly efficient, super low-cost stablecoin transactions, but backed by Bitcoin's rock-solid security. It really enhances Bitcoin's practical utility. It's not just digital gold anymore. It can be used for fast, cheap payments, too.
Interesting. Expanding its use cases.
Precisely. And related, though not directly on Bitcoin, Circle, they issue the USDC stablecoin, right?
Yeah, a major stablecoin issuer.
They just announced plans for Arc. It's a new Layer 1 blockchain, EVM compatible.
Meaning it works easily with Ethereum tools and developers.
Correct. It's specifically designed for stablecoin finance. Now, even though it's separate from Bitcoin, it supports the overall maturation of the whole crypto market.
How so?
By creating more efficient, compliant pathways for stablecoins and tokenized assets, it just increases institutional comfort generally. It helps pave the way for more capital to flow into the entire digital asset space, which indirectly benefits Bitcoin too. It lifts all boats, sort of.
Makes sense. Now, shifting to market sentiment.
Right.
We saw altcoin open interest hit a record $47 billion recently. At the same time, Bitcoin's volatility has been declining. What's the dynamic there?
Yeah, that's an interesting one. Historically, when Bitcoin's at the money implied volatility, basically, the markets guess about how much the price will swing.
Okay.
When that drops, like it has been, it often comes before sudden price swings for Bitcoin itself.
So low volatility now could mean high volatility soon.
It's often like a spring coiling. It suggests Bitcoin might be in a consolidation phase, maybe building energy, potentially setting the stage for a significant breakout after this relative calm.
The quiet before a potential storm, maybe.
Could be, for better or worse.
Yeah.
We don't know which way the breakout will go, but the setup is often there.
Right. But it's not all just price and tech, is it? There are these critical industry events around security, accountability, things that build trust.
Absolutely crucial for the long term. We just heard about Duquan's guilty plea, August 12th, 2 fraud charges from that massive Terra Luna collapse.
That was a $40 billion collapse, right? Huge impact.
Devastating. As part of the plea, he's forfeiting over $19 million and giving up his stake in Terraform Labs.
Why is this plea such a big deal for the industry?
Well, it's a landmark event. It shows there's increasing effectiveness in actually prosecuting large-scale crypto fraud. It sends a very strong message. This industry isn't lawless.
Accountability matters.
Exactly. For you, the investor, while obviously painful for those hit by Terra Luna, this outcome ultimately helps build greater trust and confidence in the broader market. It shows consequences exist. The ecosystem is maturing, developing accountability.
And speaking of accountability, there was also that story about the 2024 Bitcoin theft.
Ah, yes, the 19-year-old Veer Chittle Wiz
Stole about 4,100 BTC, $243 million through social engineering. Then revealed his identity on a live stream, and then allegedly committed another theft while on bail.
It's quite the story, and it serves as a really critical reminder for everyone listening about personal security.
Like what specifically?
Strong two-factor authentication on everything. Extreme vigilance against phishing those fake emails or messages trying to trick you. Always, always remember, if an offer or request feels too good or too urgent to be true, it probably is. Double-check everything.
Basic cyber hygiene is crucial.
Absolutely paramount. But the story also highlights something else. The increasing sophistication of on-chain forensics. People like Zach Akrati played a key role in tracing those stolen funds, helping unmask the thief.
So the blockchain itself can help catch criminals.
It can. It helps build trust in the ecosystem's ability to combat crime and recover assets. It makes the digital world feel a bit less like the Wild West.
Okay, let's bring it back to maybe the most powerful demand driver right now. Bitcoin ETF inflows.
The elephant in the room.
Since approval in early 2024, these U.S. spot Bitcoin ETFs, they've pulled in over $54 billion in net inflows. That's staggering.
It really is.
And BlackRock's IBIT fund alone accounts for over 76% of the U.S. ETF volume. We're seeing consistent daily buying, like 2,000 to 3,000 BTC being scooped up day after day. Price dips get bought almost instantly by these funds.
This represents a continuous structural demand shock to Bitcoin's finite supply. Think about that, a constant vacuum cleaner sucking up supply.
Right.
These ETF inflows are effectively removing Bitcoin from liquid circulation. They're placing it into long-term, passive holding, accessible now to a much broader range of investors, people, institutions who couldn't or wouldn't hold crypto directly before.
So it opens up a whole new pool of capital.
A massive pool. It's a fundamental re-rating of Bitcoin's value as it gets integrated into traditional finance products. It's a complete game changer for its long-term valuation prospects.
So when we step back and look at the narrative for Bitcoin, just over the past 24 hours, but really the last few weeks, it feels overwhelmingly positive, doesn't it?
It does. There's this powerful confluence, like you said. Regulatory legitimization is happening.
Yeah, slow but steady.
Accelerating institutional adoption is undeniable, and the tech keeps advancing within the ecosystem. It really feels like a pivot point.
A maturing process.
Exactly, that improving regulatory environment.
Yeah.
It's giving traditional finance the confidence it needs to engage more deeply. That leads to the institutional inflows we just talked about, which systematically absorb supply, creating that sustained demand-side pressure.
And the innovation keeps it relevant.
Right. Ensures its long-term relevance, expands its utility beyond just being digital gold.
So for you listening, the opportunities seem clear. Broader investment options like 401ks, potentially. ETFs are already here, more market depth, better utility, global adoption. It's all trending positively. Of course, we always have to mention the risks, right? Regulatory delays could still happen. Market concentration is a factor. Security is always a concern. Macroeconomic headwinds could interfere.
And competition from other blockchains. Sure.
Competition, yeah. But the momentum right now feels very strong.
It does. And if we connect this to the bigger picture, what we're really witnessing is Bitcoin evolving right before our eyes.
How so?
It's transforming from maybe being seen primarily as a speculative asset to becoming a truly foundational digital asset. It's serving both as that premier store of value. The digital gold argument is stronger than ever, but also as a dynamic platform for future financial innovation, thanks to things like Lightning and RGB. This deep dive really shows that powerful trajectory is underway.
So the final thought for you to mull over. How will Bitcoin's growing integration into traditional finance continue to reshape not just investment portfolios, but maybe the very nature of global financial transactions in the years ahead? We've explored its current momentum. What part might you play in its future?